We are here, we are here, we are here. Amazing day, everyone. This is Cam Jones, FX Daily Analysis Overview. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family at Global Traders Elite on Discord. Friends and family will prosper. Let's get back to it. The date is December 19, 2020. The time now is 12:22 p.m. The pair that we will be working on is AUD CAD. That's a currency pair. The Australian dollar versus the Canadian dollar. So we're going to check out the market and see what's going on. I'm going to grab my paintbrush. We're going to mark up in blue. So we can see the market created higher highs back in the area years of June 2013. So between October 2012 to about April 2013, the market created higher highs, and then the market dropped down and created second level higher highs, which would be here. And that's back in the years of a little bit of 2016, 2014, all the way to about, you got to retest here, try it again. So about 2018, between 2014 and 2018, the market has reached second level higher highs, wasn't able to hold, so the market rallied down all the way back down to the bottom. And what we can see here, and this is a pattern, we'll talk about this pattern here later, so I'm going to circle it. So this right here is a pattern that we can go over and discuss what we see and what happened and why it happened. So the market created lower lows. We see a push down to the bottom. It wasn't able to hold, so the market ended up coming back up. And then this is where we at, where price action currently is. So we're gonna draw. We're gonna do some marking up, some additional marking up to see what's going on with the market and if we can place this trade tomorrow at 5 p.m. So first thing we can do is create our trend line of looking for the direction the market is going to go in, so we can see that it's an overall uptrend at the moment. We got to retest somewhere here. Is retesting previous areas, as we can see. It's retesting over here this way. So it's a strong support. So all it's doing is retesting previous support areas. And we can see it somewhere here. So 1, 2, 3, 4, 5 touches. We got 5 touches, which shows it's a strong support line. So we do know there's an uptrend. We just had a retest. The market just broke out of the uptrend, and it didn't close out yet on the monthly. So we're gonna go down the time frame and see what's going on. Let's grab another SR line to sit here and say, okay, market price action is trying to reach second level higher highs. So the market is trying to get somewhere back here, and the market is actually trying to break this level here to go up higher. So we see that if the market breaks here, break this level here, we can bring that up higher. Let's say the market breaks this level here, we can see that it's going somewhere. Let's go down the time frame. Let's go down to weekly. Let's tighten this up a little bit and see what's going on. So on the weekly, we're going to just tighten up our trend line on the weekly. The SR lines, which is the green lines, support resistance lines, still looks good. So there's no need for me at the moment. Look like I need to change this around. We can see the major area of second level highs where we got the touches 1, 2, 3, 4, 5, 6 touches to the top. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10, 11. We got 11 touches to the bottom. So we can see we have a strong resistance and a strong support in this area here, and the price is trying to break out of this area of resistance. So what we're going to do is, let's go down to the daily. Let's take a closer look of what's going on and what the market may or may not do. So we have our trend line. We see that the market is going up. It retested on previous areas over here, and we see a pattern. I see a pattern. So this is the second pattern I see inside of AUD CAD. We're just going to circle it right now. We're going to jump back onto it later. So I did mention the first pattern we did see in the monthly. We did see, let me check the weekly to see if we see another pattern. I don't. So the monthly and the weekly, I do see that same similar pattern right here somewhere at the bottom. We're going to get back to that soon. Once we go down to the daily, we can see another pattern, which is right here. I'm just going to circle it. We're not going to get into it just yet. We're going to get into that towards the end. So what we see here look like a W. So we see a W formation. I'll try to draw it out for you guys real quick. So the W came and it broke out. So this is a retest. And so the market's trying to see what it's going to do here. If it can break this resistance. If it can't break this resistance, then we know that it's going to head right back down towards this trend line and may shoot back up. So it may try to reach previous areas of resistance support, which would be, if you look at it on the daily, it would be this line here or this line here. So the market is going to try to reach what price action currently is. It's going to try to come to this line and go up, or it's going to break past. Draw in a different color. Price may try to break past the first resistance line to come to the second resistance line area and come up. There's a chance that market can break the trend line as orange, so we don't know. It may ride on top of the trend line, break the trend line. I may need to adjust my trend line, but at the moment, what we're focusing on for the market is to come down, to touch this first resistance line, to go up. If not, if it breaks through, it may retest to try the second resistance line of secondary lower lows to break up. If not, there's also a third chance. I'm going to draw this out for you and put this in a different color. So there's also another chance that the market, that's good, let's turn this to color, turn this to green. The market can come here, come down, past both areas of resistance to touch a major area of resistance on the previous time frame that we had drawn out on the support, which will be this green line here that we found on the weekly and the monthly. It can be so strong that it may not break through and it can retest. But we don't know when the retest is going to happen, and we don't know if it's going to be a breakthrough. So we just waiting for the current price, which is this green candle, to come to the top of this resistance, this major resistance, to see if it's going to break down to come up. But right now it's a waiting game. So this is what we're waiting for the move to do, so we can take this trade for Sunday. If not, probably Monday, Tuesday, Wednesday, or if we have to wait following days, could be next week. Never know. But at the end of the day, it's a waiting game, and what we're going to do is wait for the market to do what? Do what it do. Okay, so that's my markups for the daily. So if we do have that breakout, we have that retest, we may be waiting for that retest. If it happens, it happens. We can catch at the bottom of the retest. For experienced traders, we can probably find our entry for our support, somewhere within this area here. So if we find that area of support of entry, we can take that all the way up to the top and ride that all the way through our first resistance line. If not, then the market could just touch this resistance line as it, coming close to, and then break out. And if we do have that breakout, let's take a look at how many pips are we looking at in the market for this move. So let's say we'll probably find entry somewhere right here. It could be a little higher, it could be a little lower. It just all depends on how the candles forms and what's your strategy and what's your IC. So for me, I know I kind of take entry a little above the resistance line or my resistance lines, and I would take entry somewhere here and I'll ride that all the way up to the top. So let's see how many pips we're looking at. So we're looking at an estimate of 408 pips. Okay, for this move. So this is a good move. It's an amazing move that we can take in the market, and we also looking forward to taking the market. So we just gotta wait for the market to do what? wait for the market to do what it do. And that's the trade. So we're looking at 400, about estimate of 400 pips, give or take more or less, to ride AUD, CAD to the next area of strong resistance. Let's go back. So let's go back a little bit, and I want to take it back to the monthly, so we can take a look back at some of my drawings that I put up here. I want you guys to see some of these patterns. I'm actually working on the pattern sheets that we're going over towards the end of every video to get you guys familiar with the market and familiar with the lines, familiar with the patterns, the candles, all the above. These are very important. When we head over to, let's go head over to our pattern sheet, and we're going to see if we can match patterns with patterns. A pattern that I currently see at the moment, which I'm going to discuss with you guys on another page, which would be the Forex pattern page over on. So this right here, what we see is the market came down, created lower lows, and then came back up. So I'm going to show you guys what I see. So when we go over to my pattern sheet, let's see if we can figure out. So it's some type of, so this movement is some type of bullish candlestick pattern. Let's figure out what bullish candlestick pattern it is. If we go back over, we see that it looks like it's not a hammer, because we see a lot of wick at the top of that, but we can see that it was trying to do a hammer, but I guess had a lot of extension of trying to push up, but it wasn't able to hold, so it came back down below previous areas of the previous candle to create this red candle. So a similar pattern from what I see that the market did was it actually just did the hammer pattern. You can call it the hammer pattern mixed with a little bit of inverted hammer, because on our previous markups we see that the pattern created was similar to this hammer pattern, because we had the wick at the bottom, and then the mallet would be the hammer. And then, but we also have extension at the top, would be where the market pushed up and came back down, and we have extended wick at the top and the bottom, and we have the square right in the middle. So if you take the hammer and the invert it, and you look at it back at what we found on the pair AUCAD, is the same thing, but it's just that the pattern is not actually red. It's not red, it's green. Similar to the same things, inverted hammer. The color can change of the candle. So this hammer's, we see green. The inverted hammer is green as well, but on our markups we do see that it's red, but it's doing the same thing as the hammer and the inverted hammer combined together. Okay, so that we do know that the market is going what? The market is going up. So the market has exhausted itself on previous AUD CAD, which is here. Okay, so this is something that you will be wanting to look for for patterns. So you look for patterns in the market for the market to do what it do. So we know when we see a hammer or inverted hammer, the market's trying to go up, which we see here. We've seen a hammer and inverted hammer in one with the opposite color of the red, which will be this last candle that pushed market down of the body, and then the market came up, retested, came up again, and we may be looking for another retest to shoot up, or if not, the market may shoot up the previous areas of major resistance to retest, to break out further. But we don't know what the market's going to do, so we have to wait to see what the market's going to do. So let's go back over to the Forex pattern sheets. Let's break down a little bit of Forex patterns for you guys. So we're taking a look at the bullish candlestick patterns. Last video I went over the hammer. This video I'm going to go over the inverted hammer and what we see in the market. So with the inverted hammer, the price came down from somewhere. It created two forms of it created two bearish candles, and then the middle candle, which we see here, is an inverted hammer. Inverted hammer, just all you got to do is picture a hammer reversed upside down, and you got the mallet at the bottom, and you have the stick of the hammer at the top, and that's an inverted hammer. So for me to explain this to you guys and what I see with the body of this candle is that the market came down with two bearish moves. The third candle formed. So where this wick came from, the wick is, it could be a wick, it could be call it a wick, call it a shadow. So where the shadow came from is that the market entered in this third body, the price went all the way back up. So the color possibly changed to, it could have been green, wasn't able to hold, and so the market, so the wick was green, wasn't able to hold, and it came all the way back down, it closed out. Because we don't see no wick at the bottom of this inverted candle, it shows that the bearish, it did not take any type of control within this candle, because we don't see no wick at the bottom. The bearish move wasn't able to create any movements down, so it just closed out with the green candle. So if we have two major moves previously was two bearish candles, and the candles aren't able to hold for the third candle and create any type of bearish movement, it just shows that the bears lost momentum. The third candle formed as an inverted hammer, which it shows that the market is a chance that it's turning around to be extremely bullish, and that's exactly what we've seen, because the second candle that formed, we see a little bit of wick at the bottom. As I said, the third candle, the fourth candle that formed, we see a little bit of wick at the bottom because the price came down a little bit, wasn't able to hold, came back up, closed out, and now we got a strong secondary bullish candle that was able to hold, closed out, and now we're gonna wait for the third candle to come, and it was another bearish candle that closed out. So it shows that the market was strong enough to create, it was strong enough to slow down the momentum of the bearish candles, which we see the first two candles, to create try to find a stability of the third candle, which was a bearish candle, which is a candle that's going up, and created two more candles, two more bearish candles right in the middle of that green hammer, which shows that, okay, the market is strong enough that we have three bearish candles that the market, there's a chance that it's going to go up. So, and, you know, we probably take it for the buy. You know, if we catch at the bottom, if you would have seen that move, give it take beforehand or after, or you can wait for the retest. So let's take a look at the Dragonfly Doji. Let's talk about the Dragonfly Doji. So the Dragonfly Doji is here. So we have price coming down from somewhere. It formed a bearish red candle, which is coming down, a down candle, which is bearish, another one formed, and then you see a try to form some type of body, created a line with another line. It looks like a T, which is a Dragon Doji, which shows that the bears wasn't able to create and form another bearish down candle here, and so the market closed out and it moved to the next candle, which we see as a up candle, which is a bearish candle, and that form closed out. So that looks pretty good. We could have waited for a next candle to close out. We got two in a row, so we know the third candle lost momentum. The second candle or the fourth candle shows that the market is creating some type of bearish move, and we got a confirmation for the third candle, which will be the fifth candle in total. We have confirmation that the fifth candle is strong enough that it closed out even above the previous, you know, candle on the other side. So we can see that this closed out. It definitely, you know, overbite this, and it's probably trying to overbite this if there's another candle that formed. So that's the doji. So the doji, when you see a doji candle or a dragonfly candle, dragonfly doji, is showing that the market is losing momentum to shoot back up. Alright guys, thank you. This is Cam Jones, FX Daily Analysis Overview. Thank you for watching. Stay tuned for more videos.